Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the very late evening, nearly the morning of Tuesday, August 4th, 2020. And in this video, I'm going to give a technical update on the precious metals sector with most of the focus, other than one chart, on the gold stocks, and specifically GDX and GDXJ. Okay, so I just wanted to get this chart out of the way, but this is the metals. This is a monthly candle chart, and we have gold at the top, silver at the bottom. And at the end of June, gold, that was the quarterly close, and gold was able to close at a new all-time high in quarterly terms. So that was a very positive signal of what was to come and what happened fairly quickly after all. But enough said with that. What I'm looking at here on this chart is if and when we do have a correction, which I think is coming very soon, I'm looking at the levels that could be support for that. And for gold, what you see on the monthly chart is around 1750, 1760 or so. That comes in. So that could be a potential floor on the next correction. And for silver, the potential floor on the next correction could be $20 or $21. Now, that was a very significant level, actually dating back to 1980. And specifically on the monthly chart, silver, after it crashed, that first rebound after the crash, that peaked around 21 or 22. So that was a significant level, and it was a significant level again in 2008, the peak there, and then in 2016 for the peak. You can see they with the arrows on the chart. And so silver nearly got to 27. I mean, that's going to be the next resistance target, 27, 28. I mean, I think silver got as high as 26, trading in the 24s now. But the key is 20 to 21. That looks like it could be a low or a floor for the next correction. And so even though in the very short term there's a lot of risk here because the market is really getting overheated, and it's almost certain that we're going to get a correction and maybe a snapback pretty soon. But the positive sign is after the initial selling, if you look at the metals potentially having floors of, just below 1800, 1760, 1800 for gold, and then 20 or 21 for silver, those are really good levels for the sector. So even if we get that correction, other than the first couple weeks or the first month or two of the correction, I think the stocks are going to be fine. And I know I'm going on too much, but that's my view on the metals is we're going to see a correction, but the floor for the next correction, if it's indeed the levels I mentioned, that's still really good for the sector. Now, okay, let me talk about the stocks and why in the very short term I'm concerned and why I think you should be concerned. Now, first, I want to talk about the breadth. And breadth indicators, we like to see them strong, but when they get to be too strong and then they're strong for too long a period of time, that's a market that's too overbought. And so it's just the buying has been exhausted. There's not any more room for buying to come in. And that's kind of where we are with the gold stocks. I mean, if you look at the percentage above the 200 DMA, I use the Huey for that. That's at 100%. It's also 100%. It's also the same reading for the 50-day. So both are 100% of the Huey stocks are above the 50-day and 200-day. Now, the bullish percentage index there in the middle, that's a breadth indicator for GDX. In the last 4 weeks, that's basically been between 96 and 100%. So it's one thing to get up to that level, and it's the first time you hit it. But when you're at that level and then you kind of stay at that level for a couple weeks, that's when the market starts to get too overbought. Let's go to GDX new highs. I smoothed that with a 20-day moving average, and the 2016 peak and the 2019 peaks were basically around 30, 31%. So we hit 29%. So we're right there. And this is something that my subscribers know. I've been watching that in the last week or two. That it wasn't quite as overbought as the other things were, but Now it's reached that level, the same level as 2016 and 2019. So again, all these things are extremely overbought, and it's a similar picture for GDXJ. I show the new highs there, and again, the 2016 and 2019 highs. 2016 was around 30%. I'm talking about the smooth 20-day moving average. 2019, I think, was 27, 28%. Or maybe it was 25%, because I see we just hit 27%. So similar to GDX, I mean, that's at an extreme. And then you look at the percentage of the stocks in GDXJ that have closed above the 200-day and the 50-day. They're both at 100%. So the sector is at a full-blown overbought condition. And moving on, and I think this is my last chart. So you take the fact that breadth has been extremely overbought. Now let's just look at the price action itself. And basically last Monday, not Monday yesterday, but the week before, when the market had that big gap up, GDX and GDXJ hit really strong resistance targets. And not to scratch my own back, but I did in the premium update the day before, I mentioned, we could peak around these targets. And the reason why I mentioned those targets is because, as you see here on this chart, I was talking about for GDX, I think 44. And for GDXJ, I think I mentioned 62 and 64. But we can see, look at GDX. I mean, that peak came in right at the 62% retracement. So right about 42, 43, somewhere in there. And also, if you look at the 2018 low and the 2016 high, that gave you a measured upside target of 44, 45. So a lot of things were pointing to that level. So that's what we hit last Monday. The gold stocks have not gone back up to that. Same thing happened with GDXJ. I mean, that came very close to its 38% retracement of the bear market, which I think it's at 64. And I think GDXJ, it may have ticked 64 or peaked in the mid 63, something like that. But in addition to that, if you look at the double bottom in 2012 and then also the low in early 2010, the underside of those bottoms is, I think, right around 62 to 64. So if you look at these levels, a lot of things are pointing to these levels being resistance levels. So, I mean, if you look at this chart for GDX and GDXJ, this is enough to tell you that this could be a level where the sector peaks for the time being. And in addition, I mean, I'm not even talking about the breadth indicators, which I mentioned in the last couple minutes, those last couple charts. So there's a lot of things arguing for a correction and a pullback now. Last point I want to make before I forget, the measured upside targets from the major breakout in the last couple months. For GDX, that target comes in at 50, so I show that on the chart. And for GDXJ, that target comes in at, I think, 82, 83. So if we're focusing on the juniors, there's still a lot of upside. So after this correction that's coming, after that runs its course, the market is probably going to be in position to resume higher and advance towards that target. So we're not going to see like some massive counter trend move. It could just be something that lasts for a couple months here. With all that said, before you go and turn this video off, if you have not already seen this in my last video, I'm giving away a report on my top stock pick. This is my largest position. I believe this has 10-bagger potential over the next 2 to 3 years. You can get this report free. Go to thedailygold.com/top-stock-pick. That's all for this video. I hope you enjoyed it. Thanks so much for tuning in, and I look forward to doing another video update for you guys in the weeks ahead.